about 0.4% yesterday. They obviously were leading the way in the market, and we've seen this quick pause and pullback as a defensive play. It's moved out. People are kind of moving into the stock market, and we're just seeing a bit of a pause here. This is a very strong chart pattern still. It still has some work to do, I think, but overall this is pointing to higher pricing. And of course, if we tend to see utilities outperform again, if they start to run, then we'll also have a little bit more of a warning that the stock market might have a little bit of a hiccup as well. But at this point, we're seeing people take a bit of a breather here in the defensive plays. This is very similar to gold, silver, miners, utilities. We're just seeing that money kind of rotate away from there for the moment. If we take a look at crude oil, again, it had that recent bounce up into resistance. It's trying to figure out what it is going to do here on the daily chart. It has had a move down. This I feel as though is a little bit of a bear flag, and we're going to see the second half of that move back down. In the grand scheme of things, it hit support right down at this level, had a nice strong bounce into resistance, and now it's being rejected. From the short-term chart, it was in a downtrend, and then suddenly we saw it rally up and got this red shaded area, which is telling us it's overbought. And we've seen it kind of pull back since then and take a bit of a breather. The 30-minute chart definitely shows the little bear flag a little better here. You've got this move down. We've got this potential bear flag. Using a Fibonacci extension, we can get a little bit of an idea of the short-term momentum to the downside here, telling us that we could see crude oil today or Monday move back down to this 58 level down here, kind of right just before all this news hit. We saw a pop in oil pricing. So that's kind of where I think we could see oil fizzle out over the next session or two going forward.